Mitchell here from CSOP Asset Management again to bring you our latest product updates. As we're in the midst of a range of uncertainties that are impacting global markets, here at CSOP we are constantly striving to roll out new ETFs to offer investors with a wider range of investment themes to easily plug and play into portfolios. Therefore, we are pleased to announce our new ETF, which is listed on the Hong Kong Stock Exchange under ticker 3004 and tracks the FTSE Vietnam 30 Index. This index comprises of the 30 largest Vietnamese companies by market capitalization that are listed on the Ho Chi Minh Stock Exchange, which are the companies that are sitting at the heart of Vietnam's immense economic growth story and one of the world's fastest growing markets. While economies and markets have been heavily hit since the pandemic, the FTSE Vietnam 30 Index has far outperformed its global peers, with positive returns of 19% and 38% in 2020 and 2021 respectively, and at the same time became the only Southeast Asian country to achieve positive economic growth in the same time period. The IMF also forecasts Vietnam to be one of the fastest growing economies in Southeast Asia for years to come, which has already seen its GDP multiply 15 times in the last 25 years or so. At the core of this impressive economic growth story lies structural forces that provide support for it to continue, such as an encouraging government and policies, and a favorable demographic support in the form of a young population with high literacy rate. In terms of government and policies, a stable political environment and an open-minded leadership makes Vietnam market stand out from the Southeast Asian peers. Throughout the last 3 decades, we have seen a series of policies positively impact the economy and enabling it to grow within this time frame, such as joining ASEAN in 1995 in order to enter the Inter-Regional Economic Cooperation, further joining APEC in 1998, the WTO in 2007, and a range of laws that were implemented to unify the management of foreign and domestic investments, which ultimately abolished prior restrictions placed on foreign investors. Furthermore, the government have strategic development goals and policies geared towards turning Vietnam into a developing country with a modern industry and an upper middle income by 2030, with an ultimate goal to become a high-income developed country by 2045. Since 1986, Vietnam has established economic trade and investment ties with about 224 countries and territories and have signed over 500 bilateral and multilateral agreements. The EU-Vietnam Free Trade Agreement has boosted Vietnam's trade surplus with the EU by up to a record $21 billion in 2021, where coffee, cashew nuts, rubber, vegetables, pepper, rice, and tea are Vietnam's dominant export commodities. As well as excelling in exporting commodities, Vietnam has also seen a benefit in China's economic transformation into a consumption-driven economy, where there has been an increase in industry and manufacturing as it took over a share of such labor-intensive industry activities as well. We've seen big global brand names outsource significant chunks of their operations to Vietnam, such as Samsung, who are Vietnam's largest foreign investor, and produce over 50% of their mobile phone shipments and a third of their electronic product shipments there as well. Brands like Nike and Adidas have also shifted most of their footwear manufacturing to Vietnamese factories. Foreign capital flows to Vietnam have also been very stable since joining the WTO in 2007, with many tycoons around the world placing significant capital into the market. Therefore, as a result of these factors, the export-oriented Vietnamese economy has seen stable year-on-year growth for more than a decade or so, with some comparing it to the Chinese economy 20 years ago, which has also led a rapid development in its financial markets, where the number of new brokerage accounts opened in 2021 exceeded the total number of accounts opened in the prior 12 years, as trading turnover and market cap both grew significantly. On top of the above factors that have contributed towards Vietnam's impressive economic growth story, its population also leads it a demographic advantage for the future. and boasts a literacy rate of approximately 100 million people, of which 95% are aged between 15 to 60 years of age. Furthermore, a young population and low urbanization rate serves as key ingredients to a higher economic growth potential. So why use an ETF to buy into Vietnam's economic growth story? Well, first of all, an ETF provides easy access into non-mainstream markets such as Vietnam, as typical investors who want to buy into the market will encounter many inconveniences such as cumbersome procedures, high costs, language barriers, so on and so forth. ETFs can provide the easiest, cheapest, and most efficient investment channel to tap into markets as such. Secondly, as the market is in a relatively early stage of development, an ETF can also help diversify and invest into a basket of these top players, which helps minimize the swings and volatilities incurred from single stock investing, while also providing full transparency so that investors will know the exact constituents they are buying into at all times. Lastly, investors may outsource the market expertise to ETF issuers such as CSOP, where we will do the homework for you and help screen out the companies. We will also perform periodic rebalances in order to readjust the risk exposure investors have to the market. So that just about wraps up our video on 3004 ETF, which is listed on the Hong Kong Stock Exchange. We hope that this new product can help investors gain exposure to the very niche and fast-growing Vietnamese market, or that you found this video informative at least. And if so, do take the time out to like and subscribe to our YouTube channel in order to stay up to date on our products and market commentary. You may also visit our company website for the latest product information. See you again next time.